want an exposure to a market or an
Everything they need in one place.
Being the world's foremost authority on individuals, advisors and institutions.
Hello and welcome to Morningstar. I'm Emma Wall, and here with me today to give his 3 bond picks is Nick Hayes, manager of the AXA Global Strategic Bond Fund. Hello, Nick.
Morning.
So what's your first bond pick?
I like peripheral corporates. You know, I think we've seen over the last couple of years that you're seeing a big differentiation between Northern and Southern Europe, but certainly we like corporates that are Southern European, have been beaten up over the last couple of years, and they're still seeing a wider spread than the sort of Northern European spread. So certainly investment grade, but also high yield names that are coming from Southern or Southern European areas. I think they offer attractive yields.
So investors will hear high yield, which we know are a bit more risky, and peripheral Europe, which we associate with risk. Is this just a very risky play then? Or?
It's certainly more risky than Northern European, but the point is that everyone thinks it's so risky. A lot of Southern European names actually are quite diversified, so they're global businesses. They might have exposure to North and South America or Asia, but just because they're tarnished with that Southern European name, that's why people have been quite scared over the last couple of years. So that's why there's, we think, a pretty reasonable spread, and we think that offers opportunities.
So choosing quality then?
Absolutely, yeah. There's a variation. You know, bank debt, for example, we tend to like peripheral names, but prefer the sort of senior debt rather than the very, very subordinated names. But certainly, so choosing the right type of quality.
Financials there. I know your second pick is insurers.
Yeah, we like insurance papers. Again, it's a sector that's much maligned. It gets thrown in with the sort of the bank debt. And I think if you look at average indices, it's a sort of 10% rather than bank debt might be 30 or 40%. So we think it's much less covered than it should be. So we have what I think is a pretty good analyst who covers insurers. We look into the individual names, and there we like to take quite subordinated issuance from insurers because we think there the risk reward is pretty attractive.
Are we talking about UK or US here?
No, European, UK and some US names, but you know, again, we could even delve into some of the sort of more peripheral names in insurers where we think that the risk reward is pretty attractive, but we certainly like some of the sort of more global names.
And what's your third bond pick?
Third bond pick, I think, is inflation linked. It's been much maligned again. Last year was a pretty bad year for inflation expectations. People, despite the recovery, people are starting to have pretty low expectations for inflation. Ultimately, we think that with all the QE that we've had, there'll be quite big inflation, probably problems, if not big inflation pickups over the coming years. So we think inflation protection is quite cheap. The key to inflation protection, first of all, is the duration. You know, what kind of exposure to underlying maturity are you having, but also what's the break even. We much prefer break even to duration, so we like short-dated inflation protection.
Regarding inflation, obviously emerging markets have seen some of the last year, but inflation in developed markets has been quite suppressed. Are you saying then you think this is not going to last?
I don't think it'll last. And I think if you look at the US, for example, the US economy is further ahead than we are in the UK and particularly Europe. So I think once we start to see that employment level come down, once we start to see some sort of wage inflation, then I think there definitely you start to see a pickup in inflation. The expectations were it will come sooner. Those expectations we've pushed out, but we think certainly we'll start to see inflation, but certainly in the US more so than the UK and Europe. Europe is still slightly struggling economically, so therefore that's where there's probably more expectation of deflation than inflation, but we'd like inflation protection in the US in particular.
Nick, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.